1.7 trillion pesos. That's the value that vanished from the Philippine stock market in just 3 weeks last year. This wasn't a global crash or some unpredictable market shock. It was the direct cost of corruption, a scandal rooted not in complex financial instruments, but in the very mud and concrete of the nation's infrastructure. In September 2025, a Senate inquiry blew the lid off massive fraud in government flood control projects. Money meant to protect vulnerable communities from typhoons was instead siphoned off through kickbacks, substandard materials, and even completely fictitious ghost projects. The Department of Finance estimated the direct economic loss at up to 118.5 billion pesos. But the real cost was human, as many as 210,000 jobs gone. The market's reaction was immediate and brutal. The PSEI tumbled into a 7-day losing streak, its longest in months, reaching its lowest point since April. The sell-off was led by foreign investors. They saw the headlines and ran for the exits, pulling out a net $7 million one day and another $9.5 million the next. This capital flight sends a clear signal. The perceived risk of doing business just skyrocketed. The damage wasn't contained to the main index. Sectors like construction, infrastructure, and property, all tied to government spending, took a beating. The Philippine peso weakened against the dollar, making imports more expensive for everyone. It shows how corruption isn't a victimless crime. It's a tax on the entire economy, paid by ordinary citizens. As the head of the Securities and Exchange Commission put it, this crisis wasn't just a market issue, it was a trust issue. And when that trust erodes, the foundations of an economy begin to crack. For the Philippines, rebuilding that confidence is now the most critical infrastructure project of all.